Hello, welcome back. Excuse me. Welcome back. Let's do a end of day review for today. Today is Monday, August 28th, 2023, and it's the first trading day of this week. This week we have a very high impact news. It will be come on Wednesday or the 30th. So the day before, the last day of August is 31st. So on 30 we have a GDP release. So at 8:30, let's see what is the number. So the consensus number is 2.4%, right? And the prior is 2.4. Okay, let's see. That's it, high impact news. Okay, look today. How is SPY doing today? So today is 0.63, which is equivalent to 0, right? 0.63. We need to capture the number, and then oh man, look at this, something going on. Look at this, the volume. Look at that. You see the daily volume right here? It's 102 million share, and you look the average 60 day about 76 million share. Wow, that's a huge number. That's a huge transaction right there. For a Monday, that means someone go in and buy or sell with a huge volume. So it doesn't look like a sell day. It looks like a range day. You see, range day around the open price, but it stay above the new week opening gap, which is the close of last week. Let's look at the weekly candle. Give us some idea right here. Right, it's the weekly candle. Yep. So it opened above the close of last week. So it's because it above the new week opening gap. So it's above. So it's a positive right there. Excuse me. So let's look at this week real quick. So we have this week is the 35 week, right? Let's see what the stack on the week of 35. So the week of 35 up only 41.94%. So that means about 59%. So 59% is down close. Okay, and the average trend high and low is about $4.86. So far we have is about $3.4. So it's around there. Just the very first day of the week, the range is significant right there. So let's see how it's played out for today. Yeah, let's put out. Okay, let's look at the volume again. 100. That we record this number. So the daily volume is 102 million share. 325 103. Yep. Alright, now look at the practice trade we took for today. We learned a ton of lesson today. We have a wonderful Monday. So we have a huge lesson, big lesson, right? So in the pre-market, we see the London high or the buy sell rate were taken, right? So it either we can understand that can be a stop run, rated liquidity, or a market structure shift at that moment. But now we look back, we believe that is a market structure shift because it stayed above the London high. It's not breaking down. But we also see another interesting that the prior day high were taken but not by London high. Okay, it take after that, right? So that can be a significant force right there. And also in the London, we have a $3 move in London. That's a very huge move right here. And also we have the smart money diversion at 9:30. So right here, look at the 5-minute time frame. So we see that the prior day high is taken after London high, right? It gives you an idea that this high is not gonna be a stop run, right, or liquidity hunt run or rated, but actually it's a market structure shift, and it retests. You see, it retests this level, London high, 1, 2, 3 times, 4 times right here, 1, 2, 3, 4 times right there. That means a lot of people buy 100,000 shares. That's a huge number. I mean, when the last time we see that volume, I mean, I haven't seen any. It's a huge volume. That means the number, I mean, we can make a good guess that it's set up for the Wednesday move right there. Yeah, we have to do the deep research and see that. But anyway, so by that we mean that the prior day high right here is taken but not by London high. Okay, after London high, it's been in the New York session, it take out. So that can give us a normally the bearish situation is the London high, take out the prior day high, and then it's set to one down. But in this case, different. And also in the London, the move is giant. It's $3 move right here. We don't see that often at all. So that means something trigger the buy program right there for the algo to run a buy program right there. And we also see that the 9:30 open and the 9 open is above the new week opening gap right here. And also we see that we see the smart money diversion at 9, right? The QQ make a lower low, a lower low, but the SPY make a high low, so that gives us the diversion right there. In this case, we interpret this as a bullish signal right there, especially for the SPY. Okay, then go back here. That's the pre-market. We see that. Okay, we take a test practice, trade on a short setup. Let's see how do we short this one. Let's review what the process. So we do a short setup because we see buy sell liquidity right here, and then I think sell liquidity. I think we mix type right here as we sell liquidity will trap right here, it make a high low, so we trap. So we thought that a short stop right here, down 46, and the target is right here. And let's see if we turn out right. But then we modify that. We say, well, that should not be the target. It's prior swing low, which is this one, and he hit right. Okay, the stop loss hits at 10.14. What do we mean by that? Oh, and then we go long. I think that's the long setup. I see. Hold on, something around here, it doesn't make sense. Hold on, let me see. So I think there's a mismatch right here. How about this one? Yeah, I think that's a mismatch. So basically this one should not be in here. This one, it should be, yeah. So the first trade is a short right here, right, and then our target is right there. Because swing low right here, right, yeah, it's not gonna reach it out there. So that is our let's fix that for now. I think right here. So the first we just do the short setup, and we know for sure that it's gonna reach this liquidity, right? So we get out. We're not gonna stay in the trade. That's the short setup that we practice. Okay, so the second trade, which is this trade, we go long, right? We go long right here at what time? Yes, we go long at 10:01. Yeah, entry time is 10:01. Right here, 10:01 right there. And then the stop loss is hit at right here, 10:14. So 10:01, 13 minutes later, it got hit because we put right below the 9:30. Okay. And the lesson we learned is that the stop loss is too tight. Okay, so we fix the mess up right here. So that's something right there. No wonder if doesn't make any sense. Okay, so the first trade is short setup, we get up right here, get out. And the long trade is right here. We see the long trade because we see it's auto block, right? And we see the failure gap. So we see that the retest right here. That's why we go in right here in a retest. But actually after that it take it out. And later on we will see that this is all set up for a short at 10:30. And we have to recognize this auto block. So like we say before, right now it's still not become our second nature, so we still practice, so just leave ourselves some room to grow. Because like we said before, whenever you see the long setup right here, you have to pay attention to the short setup also, the opposite. See how it's play out before you engage long. So in this case, we see that at that moment we didn't see that, but now when we look back, we saw it. So that's the goal of our practice right there. We practice so it become our second nature. So in the future, maybe next week or next month, when we're good at this, we can read all of that in the future. Read all of it in real time. Then we can become a pro right there. So we can know exactly where the next move is gonna go. So if we look at this again, we see it makes sense that it take it out right here because a short setup right here. So it basically take the sell side liquidity right here in order to make another move, which is it retests this auto block. And you can see how beautiful it is. It just go and retest just a little bit up here, take the buy side liquidity, and then boom, went all the way down, take the whole buy side liquidity right here. So basically Monday is the day that it tried to build up liquidity. That no wonder you see the the volume is like 100,000 million share right there. Okay, so go back to lesson. We learned that the stop loss for long is too tight. So too tight. And then we say that we learned that it must be around a brighter swing low at 9:52. Alright, so what do we mean by that? We have a screenshot right here. Let's take a look at this screenshot. So we have what
Okay, so right here, okay, so basically we're going right here, right? We will stop right below this level at 9:30. We survive, you know, when it retest right here, and almost hit right here, but we cannot survive the last wicked right here, wicked, you know, move. It stopped out. You see, that's amazing right there. So in order to survive in this volatile, you know, move, we have to let circle. We have to let our trade enough room to breathe. In this case, that means that we have to have a stop loss a little bit bigger, right? Bigger. And we identify right here is the manipulation move right here, right? And the 50% below the 50% we're gonna go buying, and then we put our stop loss at this level. And then we put our target just right here. So if you are go long, you see that you reach right here and target right here. It's not a good setup for go long. Then it gives you a beautiful setup to go short. If you see that the long right here is just a track set up for the short, and you see the short set, the risk reward is so much better. So that's the reason why we need to practice more to see that in the real time, so we can compare between the long and the short setup. So from now on, we have to be conscious that whenever we want to go long or short matter, for that matter, have to look at the other side to see which side give you a better risk to reward ratio, and then go with that side. That's beautiful right there. That's a beautiful lesson to learn right there. Because at any moment, there are always two setups. One is short, one is long. And we are the one have to make the decision in real time. Which one gives us a better risk reward ratio, then go with that one. We cannot just go and say, oh, I want to go long. If you want to go long, then you have to come with an opposite setup to see what the short setup gonna play. You know, burn that into our mind. Right? You cannot just take one side of the coin. You have to keep both sides of the coin, and then from there, see which one gives you a high probability. In this case, it's a risk reward, right? Let's say 50%. But one of them give you a better risk reward, then go with the better risk reward ratio, because both of them have 50%. But whatever which one give you better risk reward ratio, and in longer you end up winning, even though your win rate 50%. That's the mindset we need to have right there. It just come down to that. That's the basic right there. It doesn't take anything, you know, rocket science to understand that. It's very simple. It's very basic right there. Even bolder, it's just easy does. So the easiest trade is the best one. Effortless is the best one. Sometimes we complicated thing, right? But it's all boiled down to very simple logic. So whenever the trade show up to us and we want to take that position, then think about the opposite position to see which one gives you the most risk reward ratio, right? Then go with that one. beautiful concept right there. Just simple like that. Come on, man. We can do this. Okay, so go back to us and we see, okay, our sub lot right here. But then we see that, wow, it's gonna reach this buy side liquidity, right? And you have to reach that much, so it's like you see right there, the distance here from here to here is almost equal. It's one to one reachable ratio, so it's not worth it. Then you come up with a second one, the second trade, which is short them when they are just reach here, and you see how much you reach about 5 cents, 10 cents, and you know that whenever it reaches this buy side liquidity and it fails to hold, what's gonna happen? Definitely gonna check this out. And look at this. Look at this. It's that exactly happened. Yes, right here. On 5. Good. That's exactly happened. I think on this setup we have it. Okay, I think the second one right here, right, that's the short setup, and let's look at the short setup. It's much beautiful than the long. Gives you high property right there. You see the entry on M1 right there, right? What the idea on this? Look at this. You see, have order block right here, and a huge, I mean not huge, but a significant displacement to the downside. You see the fellow gap right there, 1, 2 fellow gap right there, and look at retest 1. Look at that. Look at this manipulation, right? It retests. The reason why it cannot go up because this is the order block. Huge order sell coming right there, and it takes the sell side liquidity. And this is the where we are. What we are mistaken at first. We thought, oh wow, it's just a buy side liquidity, so it's gonna go up. It did, but it go up at this level only because it dropped the huge sell side liquidity right here, and boom, that exactly go in and take all the sell side liquidity right there. So this setup is very, accurate right here. So you see that order block, fellow gap, retest 1, retest twice right here. So if you are a little bit adventurous or take your risk taker, then you go in at this candle at 10:30 exactly, right? But if you are a more conservative, you may go scale in, right? You go in right here, should be, and you saw the huge displacement leaving, this area, and then you see the retest right here. You can go in right here. So you have 2 entries right there for this. If you look on the M1, which is 1 minute, but if you look on the 5-minute time frame, you also see that it's a bearish setup for you right there. On 5 minutes, you look at it confluent with the DR model, right? Which in this case, DR high retest at 10:30, and you see the rejection right there, and you're gonna take the short right here when it retests, and also it gives you the idea of the double top pattern right there, and the time of entry is a perfect time right there, 10:30, right? Because we know 10:30, we will know the high of the day and low of the day, right? And we know that when it make the double top bottom, then it's gonna come down, and when it come down, it's gonna surely it's gonna retest the London high right here there. And look at that, you have a $2.25 right there, and how much you reach? You reach about less than 20 cents. So that's a huge risk reward ratio right there. Let's go back to the first idea that we are say, okay, I want to go long right here. You remember on one minute we said, oh, we're going to go long right here, and then we just find out that the risk reward is not worth it, 1 to 1. But here you have 20 cents is 1 to 10. So which one you gonna do? You want to do the short setup or you want to do long setup? You know, for sure we want to go to long setup, because let's say we have 50% for each of them. So you go with the one that gives you the most risk reward ratio, right? Perfect, you see. So on the M5 confluent with the model, which is exactly which we just discussed right there on the M1. On the M1 is the, you have a setup order block favor gap retest on M1. On M5 is confluent with, right? And the risk to reward ratio is huge, right? Risk to reward ratio, I think it's 1 to 20, right? 20, 110, more than 110. It's just conservative to put 110 there. Lovely, but look, not even 110, you see. So okay, so we, let's say we hold on, go back to the 1 minute, give a little bit detail on how we're going, right? Let's say conservatively, you know, you're not a big risk taker, you don't want to go boom right here at 10:30. Let's say you are patient, right? You say, oh wow, the buy side locator was taken, now I can engage right there, right? Excuse me, I can engage it. Then you can wait for the retest. Look at this, the final order block right here. You have a buy side locator taken right here, and also you have intermediate buy side locator was taken. See that? Right, and then you can treat this is a order block. Inside this order block, I think ICT may have a concept for that. I forgot his name. It's called proportion block, something like that. Basically, order block within an order block. And let's say you conservatively you go in right here, or you can go in right here, like a previous we discussion, right here. And let's say how much you reach right here, look, and say you put above here 5 cents more, right? Oh, sorry, that's the wrong 2. Hold on, let's delete this one for now. So let's say you conservative, you go in late. How much you reach? Let's say 5 cents up here, 21. So let's say 26, 28, and see there. Not even 40 cents, about 37 cents right there. And look at that, the retest at London high. You see right here, how much you got? Oh man, $2.25. So let's put that down right there. So how much do this? With 13 cents times $2.25. Look at that, my friend. Let's pull up the calculator. So we have a very precise number, right? So you $2.25 divide 37 cents. Yeah, 1 to 6 if you are ratio right there. And you remember the long trade we tried to check setup? No, the risk reward is not even 1.4. No, that's a long set. The short rate up we tried to do earlier, sorry, right? So it's the risk reward is only 1 to 1. So why you have, no, not 1 to 1, this one. Short, yeah, not this one. I think not 1 to 4, I think just 1 to 1. Because if we do 1 to 1, it's the idea that 20 cents, we only reach 20 cents, right? We got stop out. So in order to stay in the trade, right, because we want to learn a lesson too high, so stop out must be around. Then with a bigger stop loss, then the risk reward only 1 to 1 right there. So that's the lesson we try to learn right there. So when we see two setup that form, one for short, one for long, then we go with the one that have better risk reward ratio right there. All right, so we have a wonderful review for today. We see a common theme for us that whenever we try to take a short or long position, have to think the opposite position, see which one we have a better risk to 1 ratio, then we can go with that one. All right, I think that's it for now. That's it for now. Thank you. Bye bye.